Good afternoon from the floor they see me. This is Chris Robinson with your Traders Exclusive comment for Wednesday, the 20th of December. Just a couple more business days until we get to the Christmas holiday, and then we'll finish the year up. We're going to talk corn, wheat, and beans, and then cattle. In fact, I'm going to start with cattle because that's made the biggest move here as I'm sitting here talking to you. Feeder cattle really fell out of bed today, made a new 3-month low. And I'd ask you to go back and look at a chart of feeders. If you go back to our August lows and then our November highs, we had about a $23, $26 rally, which took all that time. And here in the past 6, 7, 8, 10 days, we've given back $22 of it. That is a perfect example of why you need to hedge if you're a producer. Those prices were there, they were available. Now, you maybe couldn't have sold the physical animals, but you could have gotten your risk on paper. So that's what these markets are here for you to do. If you're a producer, you need to take advantage of them. You could have locked in those prices, and maybe you couldn't have gotten all $22, but you could have gotten a big portion of that. And that's why this building is here. That's why this building is bought. It morphed into something else where then you have managed money trying to trade it and guess where the prices are going to go. But at the end of the day, if you're a producer, and that's who I'm speaking to right now, a farmer, a rancher, you really need to use these markets. And if you don't know what you're doing, you need to find somebody, either contact me or find somebody that you trust that can explain to you how you can use the tools to protect yourself. That's a perfect example. A nice rally, contract high prices, it all goes away very quickly. And there's always 18 different reasons why it happens. At the end of the day, that chart is like an EKG of your heart. But it's the bottom line of your business. You got to protect when the prices are there. So that's number one. Number two, same issue with soybeans. 12 days ago, soybeans were at a 5-month high. We looked like we were going to keep going higher. That's exactly the point where you need to go in and set some hedges. In 11 days, soybeans have dropped 65 cents. And nobody has got a sixth sense or a psychic ability. All we know is that when prices get where they are very attractive for producers, you need to set a hedge. You're not locking those prices in. What you're doing is getting your risk on paper. If you're still going to grow a crop and if prices continue to go higher, you can be in a position to take advantage of those higher prices. But when a market gets that high, you need to protect because you can see how it just evaporates. Now, talking about corn and wheat have already had pretty severe sell-offs, a grinding lower market since harvest, really since July. Wheat dropped $2 a bushel. Corn's dropped 82 cents a bushel from its July highs. So now anybody that didn't hedge back then is now sitting there scratching their head going, what do we do now? What do we do now? I would tell you this, if you need to sell grain now to pay bills or to get an operating loan for next year, you really need to look at another strategy where you don't want to be selling grain at 11-year lows, and then 3-4 months from now, again, nobody knows what's going to happen 3 or 4 months from now. But if we are 50, 60 cents higher or $1 higher, something changes, we get a weather issue, you don't want to be looking back going, oh, I made a bad sale there. So again, there are strategies which would allow you to re-own those bushels on paper. So that's my biggest story, biggest focus of today is get your risk on paper. If you've got unpriced grain or unpriced animals, you can protect the prices till you sell them. Once you sell them, once you sell those bushels or sell those animals, you can manage that risk in case that you are selling it. That way, it doesn't matter what I say if this is the high, or it doesn't matter what 50 other people say. The market's giving you a chance to stay in the market, and over a long-term marketing year, and especially over 2, 3, 4, 5 years of marketing, that strategy can really help your bottom line. It might not make a difference over the next 10 days or 10 weeks or even 10 months, but over the next 5 to 10 years, a strategy like that can really help your bottom line. That's exactly what I do. If you're looking for help, give me a call. This is Chris Robinson. I won't be here till next week, so Merry Christmas to everybody and Happy New Year. Look forward to a lot of opportunities in 2018.